Good evening, all. This is Shay Horowitz, ShogunTrading.com. Hope you had a great weekend. Hope you're able to enjoy yourself. We're coming off holiday time, and the year is just now starting. Last week was still considered holiday week. This new week is basically the first week of the year. We inherited a certain pattern from 2007. Basically, the S&P 500 was in a wedge-shaped consolidation, which is something I showed you last week. We broke down, and this is the first wave breakdown out of this consolidation, out of wedge-shaped consolidation. Market came down very hard on Friday. I think Friday was based on economic news, but more than anything based on political news. Now, without political interpretation, without my political opinion, I think political news has a lot of influence on the market, and we're going to see that quite a bit in the new year. We basically have a whole year of election year. And anytime there's any kind of news, the market's going to react to it. Friday was pretty low volume. There weren't a whole lot of people around, so a dive is pretty normal. The people are going to be coming back this week. We'll come back to trading, so we may see the dive reversed. Notice that the S&P 500 came all the way down to around the 1411, basically. But 1405, 1404 is a major support level. You can see that going all the way back to April and August. If we break this, it will be a long-term downtrend. Here's a weekly chart on S&P 500, and you can see a very clear top pattern. You can call it in head and shoulders with a lower shoulders. You basically just lower tops. If we break this support, it will be a new downtrend. 21-day moving average, 21-week average is going to break below the 50. 200 is way below. So we have quite a bit of downside to go over here on the S&P 500. If we break the 1405, be prepared for a very long downtrend, something we haven't seen in a very long time. Now, there's another point over here. There's what the charts tell us, and what reality is. Lately, the Feds have been stepping in and saving the market. Every time looks like there's any kind of weakness in the market, the Feds come in and they inject extra liquidity, or they cut rates really aggressively, a surprise cut, and the market goes straight up. Now, there's a twofold effect that the Feds are accomplishing by doing that. One is that they're injecting liquidity, they're really helping out the market, and the market goes up. Second is they're slamming the shorts. What that means is if you're a short right now, and you know that at any point in time the Feds can come in and save the market, they can come in and influence the market, you're scared. So you're less likely to hold your short, you're less likely to be convinced about your short, you're less likely to be aggressive about your shorts, and therefore the market can bounce really quickly because people are just looking for the exit door if they are short. So that's basically what the Fed is trying to accomplish at this point. And I think they've done a pretty good job doing it. And I think that's why the market is resisting the short side. Of course, that being said, the market is a market and it's got its own special forces. 1404 is the support on the S&P 500. What I personally think is going to happen right now is I think this is just the first wave. I think the market is going to bounce around the 1404. It's going to come back up. It's going to come back to around the 1450 on the S&P 500, and then it's going to turn back down. And when it turns back down, that's going to be the real test whether or not we break that 1404. And if we break the 1404 at that point, it's going to be a very long-term downtrend. As a matter of fact, if you want me to predict how far it's going to go, I think we're going to go down to around 1250. 1250 or even below, even 1100 or so, if we break the 1404, which could be quite significant, and it could be a very nice trade. If any one of you is an index trader, indexed options trader, or an ETF trader, you can make some serious bucks if we do that. And I am going to be there for you, and I'm going to call that trade for you when it happens. One of the reasons why we do this weekly newsletter is because it is for the long-term trader and the one that wants to take on a serious position, and for that you do need a long-term trend, and I think that's when the long-term trend is going to happen, and I'm pretty excited about that. Dow Jones Industrial Average, the INDU, basically the same thing as S&P 500. They share basically the same stock, so you can see that the indexes moving together. S&P 500, I think, is a much better index, a lot more important than the Dow Jones. Dow Jones is only 30 stocks. S&P 500, of course, is 500. Broke the 13,200, came down first wave, also back to the support. I think we are going to turn back around. I think we are going to go into profit taking, make a lower top, create a lower top, and come back down. NDX, the NASDAQ 100, which I think is extremely important as far as technology stocks are concerned, really took a beating on Friday. And I do think it's going to bounce back for profit taking. Again, create a lower top, and we can, in this case, short the Qs or buy the QIDs or any one of those. We don't have a whole lot of news coming in this week. I mean, we have the normal pending home sales, consumer credit, initial claims, but we have this kind of news every week. What I am looking for, though, is for the Feds to react. Friday was not good news, economically speaking. And I do expect the Feds to react, and it could be a surprise reaction. Next Fed meeting scheduled is for January 30th, which I think is too far away for the Feds, and I think we're going to get a reaction before that. Futures right now are up just a little bit. I'm showing that the NASDAQ futures are up basically 4 points. Not a whole lot by any means, but they are up. So it is pretty interesting. A couple other things that I want to talk about. DXY, that's a US dollar index. As you can tell, we've been in quite the dive for quite a while, but we did bounce, and this bounce is quite significant. If we bounce again over here, there's going to be a higher bottom, and a higher bottom would mean that we possibly go into a long-term uptrend on the US dollar. If the US dollar starts coming up, the Fed is not going to be quite as afraid to lower rates. So I think we're more likely to get the lower rates at that point. Anyway, this is a new year, 2008. I hope you got my goals for 2008 article. If you did not get my goals for 2008 article on how to set your goals for 2008, please email us. Go to our site, showgotrading.com, and let us know. We'll help you out with goals for 2008. I'm really looking forward to a volatile year. Volatility for us is good. As long as the market is moving, we're doing well. So the more the market moves, the better the trades are going to be. So that's what I'm looking forward to. Performance, the day trading performance is posted on the website for the last month for December. I'm going to wait a few more days for performance for the swing trading newsletter, because I want to let the trades give the trades a chance to work a little bit. Trades that I called December 29th or whatever the date was. I have to give them more than a week to work, because they are swing trades. So I'm going to post the review of December 2007 fairly soon. Anyway, have a great week. Look for the Feds to act. Look for that 1404 level on the S&P 500. That's the important level. Mark it on your charts. Set up alerts for it. Watch for a bounce, and then watch for a long-term downtrend to follow that. Have a great week. Take care.